Hey everyone, welcome to your daily update for SOL and BTC. The liquidity map has changed very much in the last couple of minutes. If you're in the Discord, you would have seen I posted the map looking very even, and then as we've started to move towards um, the end of the New York market and the algos are all turning off, the books thin out, and the whales press the dump button, and as you can see, they've looking at the liquidity now, they've more or less taken most of the 1-day liquidity, and we're starting to see those targets that were um, on the charts yesterday starting to play out. So I've left yesterday's tabs open, and I'll just quickly go through them and close them one at a time because my computer is running out of grunt with so many tabs open. But just so you can see that yesterday we closed under these key levels, and I think the comment was it was pretty much just another trappy day, like the day before. The real question was, how long would we push up for before we ended up pulling back? And as you can see, we have now done that pullback, or are starting that pullback. We have just landed on one, like the very first key level that could support price on Bitcoin, but it's like a 25 or a 30-day level, and it's probably not going to be where it just magically reverses. But we shall see. We shall see. We've also landed on a 6-day level for SOL, which might drag us back up and stop out the people that have just started to chase the bearish dip. So yeah, we might see that as well. But even if it does go up, it's pretty much the minimum move for it is up to about 205, 206. So it's not huge, not a huge move. Okay, so looking at the 7-day liquidity, still plenty to take to the downside in either case, and we have news announcements coming soon, probably in about 12 hours or so. So it makes sense to go into a news announcement with kind of even liquidity, so that major players can build a position by taking one side and then push up into the other. So it doesn't actually make too much sense to go taking a whole bunch of liquidity right at this particular point of the day, so close to news, but I'm sure we'll figure out what's going on later. And then we look at the 30-day. I mean, if I was a whale right now, I would be swiping all of this liquidity to the downside, and I would be taking this big chunk right here. That would be where I'd sell into. The cascade, if they pushed past 116, would be pretty huge. But then unfortunately, if that's all it's about, like if they go up and take that and then they pull back, then chances are that's going to be the top of the next sort of downwards move. So and we've still got we've got depending on how today closes, one of the closes today is relatively bearish if we stay under 204, but it has various different resistance levels, and one of those resistance levels would mean pushing all the way up to sort of about 213, 214, like taking this liquidity up here, and then potentially having a rejection of that and pulling all the way back down. So I guess we'll see how that plays out. Okay, let's have a look at the charts. That's our fart coin. Been waiting for fart coin to come down here for days, so finally there. Okay, so looking at SOLBTC Strength, we've hit it's actually an origin level, so we've hit the daily origin level, and we're bouncing, so that's good. The top side is not technically an origin level yet, so ideally if we were to get this bounce if it actually gets some follow through, then we could come back up and break the top side. So that would be good as far as getting a pump out of SOL. If they want to flip this really bearish, well, the best thing they can do is basically bring the price down and close under the origin level. If they do that for the end of the day, which pretty much means closing under that 17089, then it could reject off the backside of it and then just plummet through to the next level down here. So but yeah, this is kind of an example of what you get when you either start on or just under trends, and then you push up into rejection and then you pull back down again. So we had some hopes that would get up there, and because we were on the trend, it was sort of about a 50-50 chance that it could open in a good spot, and it still technically is a 50-50 chance that it could, in the next 3 or so hours, it could pull back up and open in a good spot. But yeah, it's if they keep pushing this down and close under here, the intention is then to dump the strength even further. So, and then we'll be looking at the 1600 and something levels again. So see how that goes. Let's have a look at the safety assets. So of course, when you consider safety assets, it's always the reverse. Going up is bearish for altcoins. But what we have done is we've come up here and we've hit this origin level on the top side. So as long as they do not close over that 66.94 area and then bounce off the top of it to keep pushing up, then what should happen in the next 3 hours, if they can't close above that, is it should end up pulling back down, going under the trends. So you might get a little bit of a relief before daily close, just based on that. But if they manage to keep that price up there, which is kind of a bit early to be trying to do it now, you just have to keep applying that sort of buy pressure, etc., to keep it up there. But if they do and it closes over that, then you could expect it to bounce off the top side of the trend, and that means that this entire trend move here, all these candles, was just a deviation. And that's a bit scary, because if they do a deviation of a trend like that, they normally want to push much higher. So you'd be starting to look at those 68 levels or those weekly levels up to the top. So really what we want to see is this pulling back under all these trends, coming all the way down under this one, and then that would be good. We could reject off the backside of that and try to push down. So let's have a look at BTC or totals. Don't want to skip totals. So if you're watching yesterday, the comment was quite simple. They pulled it back under the key level, they pulled it back under the trend, and of course, what's going to happen? We're going to potentially push up and then end up inevitably pulling down. So that's what's happened. So we have kind of run into the back of this hold down here. We could push back up into here. It would be very bullish if we push back up above the trend and open the next candle. Obviously, that'd be wonderful, and we'd have some kind of move up in the overall totals. But more likely the case is that it's going to end up closing down, and then it's just pulled back under even more resistance, in which case it could reject. Hopefully it doesn't close up in a little gap in here again and then give us another boring day, because we don't really want a boring day. We want the price to move. If it stays under resistance, next candle opens, it's probably going to come down and test these trends down in here. And we've still got this range trend that has been broken and untested down at the 1.42 area. So, and we've got origin support levels down here at the 1.43. So, given what we've rejected off and given what we could target, it's looking like it's probably going to be some more downside in the overall totals. And yeah, if they pull it back up and give us a positive close at the end of the day, then it was a good old little fake out for the whales, and they've filled up some of their bags, and then they'll probably try to push it up. So okay, let's have a look now at BTC. So BTC on the daily was really a case of something had to give. As we said yesterday, they closed underneath the trend. They closed underneath. So that was underneath the reverse side of the uptrend. They closed underneath the downtrend, and we went on our little liquidity grab there and got everybody psyched in that we were going to go and go to the moon. And then, as you can see, it's done what it does. So I guess that the educational moral here is that if they open underneath resistance and start pushing up quite early in the day, it's generally fake. If they start pushing up towards the end of the close, then it normally means they're trying to position the price for whatever structure they're trying to create next. So in this case, we opened, we pushed up, therefore quite fake, and then here we go, we've come back down before close. So we do have 3 hours to go. If we wanted this to be bullish, it really has to get up above that resistance. It is good that it's holding these levels, or hasn't gone below these sort of 112 levels. So we might get some kind of accumulation in this area and then another attempt at going up. We will also shift the trend today, so wick is important. If we shift the trend to here, as an example, we want to make sure that the wick on the bottom of the candle is sufficient that we can bounce off the trend, because we need trends to break horizontal levels, and sometimes it's good if you can shift them from the top side to the bottom side. It actually makes it easier for the price to go up. So it's not all bad. It really just comes down to how does that wick close? Do they push it down below these other horizontal levels? I mean, super bearish would be if they push it down below these horizontal levels and they close with no wick. That would be super bearish. Super bullish would be complete fake out, pump up over the top here and explode. So those are your options, and that's how daily close is. And we do have to take into account that we have just landed on. I'll show you a level later that we've just landed on BTC, but that's where we're at there. Okay. So 7-day close. Really, it's going to come down to, does it create a hold level? So we really want this close over 112,977.8, preferably over the wick, so 113,935, because that has other implications. If we can close over the wick, we can potentially create a whole range inside here. And what we then need to look at is that we do have this resistance up here at 118 as in the backside of this broken range trend. So if we don't create a hold level today and we pump up and hit that resistance, there's nothing to stop it from just coming straight back down. So it's the fact that this is here and this could create something to try and break through these trends. How it closes shows the intention of what comes next. So if they close down, create no hold level, pump up, guess what? Another fake pump, expect a dump. If they close up, create a hold level, then pump up, you're probably still going to get a rejection. You're probably still going to get a dump, but it's going to be recoverable at a higher price than the price that we're coming from. And that means that you're actually seeing higher lows. So that's us. We still have these key rejection levels at 120 and 124.5. So, and we have a reverse trend in here at 122. It's probably a little bit lower than that. An old prior broken trend, I should say. And then we have more trend resistance, and then we have the range trend that created this entire dump from all-time high, which is up here at 127. So I was just having a bit of a rant earlier in a Discord about people being bullish. You just cannot really be bullish on this at this stage, not unless you start to see this thing break up past the middle of this range. We have swept and tested the bottom of the range. We have created a downwards facing range trend. We are holding support, but we've got these things to retest that are at 100k or lower. I mean, this one could be epic if it retests this. This is all confluence with what we've been going over the last few days. The high time frame is pointing at some pretty big dump, and so you've got 100k to retest, you've got 90 something to retest. We really need to be creating hold levels, and we just need to keep pushing the price up, and then we can leave these levels behind. But as it currently stands, they're right there, they're obvious, and it's not creating hold levels. So if you were one of those 50% retracement traders, that you see, they'd be talking about you retrace to the 50% and then you long. But the same thing works in reverse. Like if I flip this chart upside down, you've now retraced to the 50%, which means you could bounce. But this chart's upside down, so what is a bounce? A bounce is a lower low. So it's just I'll stop ranting again. But you just can't be one-eyed bulls right now. The chart does not say that. So if it starts closing over these levels and we capture this range trend, then start to get a bit more confident. But as it stands, we are out of that range. So okay, so these are just some of the ones from yesterday. So we opened the candle under resistance, both break level and trend. We rejected the trend. Okay, so that's why you couldn't really be bullish yesterday, and why it was likely to be fake, and what we've just seen. Okay, now this one opened above, and so the rejection of the prior one has been caught by this trend. So that would sort of give you an idea about, okay, well, we might, if we have a dump, we might find support around this 112 area. So this is good. It's got a couple days to go, so it means nothing today, but what it does mean is if the price stays too low for too long, then we open on the wrong side of the trend and you get continuation to the downside. If we dive through it, we might hit this horizontal support here and then come back up in the next 2 days. So that could mean that you're going to target this 110 level, which is also quite possible because there's a few other things pointing at 110. But coming from the top side, if we do it relatively quickly, we could come back up relatively quickly. But if we close under it, then we push down to the next level. So, it's where it's sitting. We might find support here, but like I say, we could keep pushing down. Okay. Try to close it. Got way too many tabs open on my trading view, so things are going a bit slow. Might have just closed 2 timeframes just then, but 4-day, we moved the trend to the top side. We did a perfect rejection of the trend. We've got a hold level down here as a target. It's 110. Okay, so it may bounce off the wick. It may bounce off the trend on the other time frame and go back up before it even hits this level, but we have bounced and rejected a trend. We typically target a hold. That means we should enter somewhere between, the 111.9 and the 110.7. So it should be heading down there, or at least trying to. And we've got a range trend down there for support as well. So once again, we should move down here. It all depends how it closes. If it closes under a horizontal level, it might then just not be able to bounce back up the same. And if it doesn't, then we can come back up and the hold might push us back to the trend again. So that's that one. Okay, we closed under the range trend. We wicked up, took liquidity, dumped back through the range trend. So 4 days to go. So we'll obviously be looking at this another time later. So I can probably just keep going on about these, but these are all yesterday's timeframes. Trend rejection, hold at 110. So okay, opened under trend, pulling back down. We've got a hold level that hasn't completed its move yet, back to the trend down here at like 105. So it's okay. Hit the hold level, hit the backside of the trend. So this is why these closes just matter so much. Pulling that candle down yesterday and closing under this resistance has just led to this fake bump and the dump we're in now. We're going to get back to this range trend at about 111.6, so we could find support there. That's possible. We could hit that, we could bounce back up. Okay. That was just a close under trend. This is pretty bad, like this one. Like this is where we start to target things like 104. So unless one of these other timeframes picks us up and gives us some kind of move to the upside to get back over all of this stuff in the next 14 days, then this is coming down to find support all the way down in this area down here. So and that was 104 down to about 96. Okay, rejecting off the hold level. Oh, sorry, that's the 7-day close for today. So rejecting off the hold level. I might have already said this, but we'll also create that range trend. And if we close down too low with a wick too high, we're going to reject off the backside of that. And that's just going to keep pushing us down. And the untested range trend is sitting down here at 100.9. Okay. Don't know if I already said that. Maybe I did. Okay, that's the one we reject off the backside. Okay, in the middle of nowhere, it hasn't triggered anything. So this could push us up to 118. So one of those timeframes that's now in play that we've landed on support could push us to 118. Then we hit a 25-day resistance trend, and then we have to go find support, and support would be sort of like 107 or lower. So someone asked today, like, how do you tell how these which timeframes take priority. And the thing is, you don't. I mean, if you just put $1 on every single one of these trades, something horrendous like 90 something % of them would all play out over a period of time. So great for spot people who want to cycle bits of their spot. For leverage trading, you kind of have to look at the probabilities when you've got a whole bunch of them pointing in a different direction or all pointing at the same levels. And the shorter time frame ones are probably going to play out faster than the longer time frame ones. And of course, if the move of the shorter time frame is inside the larger time frame, then it's probably going to play out during the larger time frame. So that's the kind of stuff you have to consider. But either way, resistance up here at 118, and if it rejects off that resistance, then it's going to be back down to sort of 105, 106. Okay. And this is the one that might give Bitcoin a bit of relief just before daily close, and therefore could change some of the structure for today. So we've got a hold level here, we've got a new range trend up here. If you just wanted to be a completely one-eyed bull and forget every single one of those bad timeframes that you just saw, that all have targets to the downside, then what this one says is it could bounce, or it could be bouncing already. And the furthest TP, so if you were to divide this up and say, where should I take TPs? You would be taking one at the backside of the trend, which is about a revisit of 115 here, or the underside of the trend, which is what we rejected off to come back to the hold. You'd be taking one here at about 117, another one here at about 119, another one here at 124, which is the biggest rejection level we have on the chart, and then another one up here at 127. Okay, so if you just wanted to be a complete bull, this could do all of that. But yeah, it's one move out of a whole heap that are pointing the other way, so I wouldn't bank on it too much. But it gives some levels if the price starts to go up, and it's possible. You know, we've got this whole FOMC thing. We've got these what do you call it, ETF releases and all that kind of stuff. So if they do just decide to hit the irrational pump button, they could go flying up here for 30 days, work through all this, take all of the shorts out. But you've got to remember, where did the price start? And if it started under all this resistance and it's about a 30-day time frame, where will it end up? It will most likely come all the way back down, you know, before the close of that candle. So next. Rejecting off the backside of the trend. Support is sub 100K. Okay. On the trend, kind of under. The wick sort of started just under when it opened. Retest prior trend is about 100K, 100.7. Retest of range trend is 80K. That's a bear market move. If we lose that trend, then you probably really are going to head into a bear market. So, but that's 60 days. So you've got that 30-day candle that could wick all the way up, take every piece of liquidity to the top, come back down in the next 30 days, have another 30 days to lose the 60-day uptrend, and then go down and retest a range trend based on the 60-day, which would almost certainly be a bear market level down at sort of 70 to 80K. So a large part of me hopes all the super cycle people are right and we go forever. That'd be really cool and exciting, but you know, you've just got to look at what the charts are saying. There's no guarantees we're going forever. Okay, we could hit the trend on this at about 109. So this one's now medium bullish. We could hit the trend. We could hit the 1618 again. We could go all the way to the hold level. Something in this time frame could take us as low as about 93.5, but it would also try to hit this topside trend at about 129. And if it's going to be the end of the bull market, it'll probably wick through it. So your blow off top would be up in here somewhere. So, and if it's not going to be the end of the bull market, it'll probably try to close over it and stay up there. Okay. Right. Rejecting off the backside of the trend, might find support, you know, 111, or lower. The lowest support level on this is down here at about 93.5 again. So these are big time frames, so hard to tell. And that has kind of done nothing. So these are sort of more like range levels. What it's implying is that the price was not able to close over the 116.628 yesterday. So instead of being up in this part of the range sustainably, it's in this part of the range, which gives us 97 to 116, or 98 to 116 as sort of a bounce area. Again, very high time frame. And the weekly, of course, we never created that hold level, so we had nothing to break trends, when the weekly closed, which is what it is. So that's where we are now. Looking ahead to just the monthly as well, it's not bad if the monthly closes down, because we can shift this trend from here to here, and it gives us a support trend to then bounce off. So it's not bad. It is bad if the monthly closes under 108, 208, because then we have a hold level and a trend, and we can use the hold level to break the trend. So that is bad. So we're looking for something in here. If we're going to close the candle yellow, we really want to pump, and we want to close it yellow back up above the support trend, making it a deviation, getting above the resistance trends, plural, because there's an interior and an exterior that are both causing problems. So we either want to close the month with a big pump and be up here above all of this, or we want to close it blue, move some of this to the downside, make less resistance therefore, and have a trend to try and go up. Then if there is going to be a longer cycle, what needs to happen is the next month needs to be a candle close to the upside. We need to create a hold level, and the hold level can sustainably break the trends. If anything in that doesn't play out, it's probably going to end up done, market over, and off we go to a bear. So that's what I'm watching for monthly close. All right, let's look at SOL. Okay, so yep, again, what we saw yesterday, we pulled back in under the trend. We did more or less exactly the same type of behavior as the day before. We pushed up through the resistance, got everybody excited. Bull market, we're back, and now we are liquidating all those people that chased the trades. So we have got this range trend that is sitting down here. Now it has been retested. It's had its first bounce, which was this candle here. So that may not support the second time. We've got the prior trend that is not actually hard closed, this one down here. So they may try to push it all the way down under the 189, 188 area, reject off the backside of that trend, and then continue to the downside. So we've got to be careful of that. If they keep pushing this down, then this becomes a big deviation of the downtrend, and therefore you're probably going to see a larger dump. Okay, we have a hold level down here. If we wick through all this and hit the hold level, that's quite bullish, because the price within the day will probably end up retracing back and going up to the upside. So it's all kind of about whether they sweep to grab liquidity or whether they close under resistance and give continuation. So but yeah, I wouldn't be surprised if they do close under here, then they're pulling back in underneath this 195 level. They're also pulling back in under this 197 break level. They'll be back under the trend. Yeah, of course, we could do another sweep, get people bullish and liquidate them again, but it's kind of it's just bearish, put it that way. It's just bearish if they do this. And as far as target levels, you could probably take a trade off this whole candle, but you just have to revise, where you take your TP. The minimum bounce for that whole candle takes you back up to about that 191 area, and that's pretty achievable based in that structure, as long as the price approaches it from the top side, because that would be similar to this, whereas it was under, it went up, it came back. If we go down from here, we should go back. So I'll probably take trades on that today. And then the 7-day. Now, the 7-day is not quite creating a range trend because it didn't quite go up high enough. So that's positive. We also are creating 175 as high time frame support again. So maybe we get a double bottom. You know, we could go down, bounce off that. Now we are under the range trend, but we're not hard closing it unless the candle closes blue. So really it comes down to, you know, how much more they butcher this before the end of the day, or if they don't butcher it at all. And yeah, maybe they even do close back up, but getting a lot of alerts. So to be bullish, it really has to get back up to about 209 today, which is not, you know, or at least it has to get to no wick on the top plus a hold level. So if we did get that 206 move play out in the next 3 hours, which would be interesting, but we'll get to that one. I think it's further along here somewhere in the charts. But if we get the 206 move playing out before the end of the day, it does put this in a bullish position because it gives us a hold level. It gets us above the 204 level. It creates a... it doesn't quite create a range trend, so that's not bad because it means it's not going to have any resistance. And it puts us above the prior range trend. So really it's about, does that 206 move play out before the end of the day? In which case this starts to look a bit better. But as it stands, it's going to open basically halfway between support and resistance if it closes around here. And then it's going to have to make a choice. It's going to go up, reject down, or go down and push up. So, and it's a pretty big air gap between that support and resistance. So 175 to the downside and 204 or the range trend to the upside, but it's probably all very, very confluent and sort of crossing over about that same point by the time it reaches it. Okay, so just, you know, what we had yesterday, we had a candle that closed above key levels, but hadn't hard closed anything. So as you can see, we're pulling back down. This is another, this is actually a time frame for today, but if this time frame pulls back up and closes over that 204.794, then positive. But otherwise, it's back underneath resistance. We've already tested the hold level. We've already bounced off the hold level. That was part of this whole move, and we'll get a new range trend down here at the bottom. So if we reject the underside of this resistance a second time, this 204 origin level, then the things that could support the price are basically going to be 181, 158, 147, 127, or 115. Okay, so it's not bullish. It's really not bullish to be closing here. And it would be better if we did close over 204. Yeah. If we don't, it just is what it is. And maybe we just keep on going down. And if BTC does decide to go hit those sub 100k levels, well, no surprise that, you know, SOL would end up down here. So, right. Yesterday's closes on the 2-day, same thing. Close under, sweep up, pull back. Okay, we'll cut down my tabs and free up some memory, eh? Okay, close under, sweep up, pull back. Okay, we've got support down here, 187. We might get a bounce off that. We've got support around here, 188s. There is lots of support too at 189, which we haven't actually hit today. So, but we've hit it so many times, it's surprising that it hasn't gone up already, to be fair, but who knows? Sometimes these high time frame moves can take a long time to play out. Okay, hit the back of the range trend. So opened under trend, pushed up, hit the back of the range trend, rejected down. So the only reason I'm really going back over these again is just so you can kind of see the relevance of where we close and what it means. So in this case, we closed above, but we didn't hard close anything. And then we pushed up, hit the resistance, pushed back down. Nothing was hard closed. If we'd got a candle hard closed in this area here, and we'd flipped this whole candle to be support rather than resistance, then the move would just be between these two lines. But yeah, as you can see, we never hard closed it, so therefore we hit resistance. There's no proper support until we hit 184 or the trend or the hold, something down here in the low 180s. So okay, this is our potential 206 move. So we've retested the prior broken trend. We've hit the hold level. And if we spend too long down here, then what's going to happen is it's just going to get stuck under that trend again and have to keep going down. And that'll be confluent with a lot of those other time frames that are pointing down. But there is the chance that this is a wee bit of a fake sort of move just before daily close. And then this hold level kicks in, and then we come up here to 206. Okay, so it's possible. So this plus the fact that BTC landed on a support hold might mean we get that move back up here, which doesn't mean anything until it closes, and it's still 5 days away. But just if you see it pump back up before daily close, that's why. And then that has implications on those other time frames because it makes their closes better. So that's 6 day. Okay. And then if we start getting into the bigger stuff, we never quite hit. So we hit the whole candle. So we're rejecting off that. We should, that should give us a move to around 182 if it pushes through all the support. We haven't really hard closed any of that, so it's entirely possible. And we have a high time frame origin support level down here at 173. So we could push all the way to 173, and then we could end up pushing all the way back up to 204. So that's a range between there and there, and nothing in the middle is hard closed, so we could do that. Okay, we opened in a good spot to potentially go up. I wouldn't read anything into this time frame at this stage. It hasn't technically rejected off anything. It's got 11 days to go, so this could be an up candle by the time 11 days finishes. Never know. Although we're diving down still, so might end up getting my lower Farcoin entries at this stage. Okay, alerts. What else we got going on here? It really is. It's literally taking all of that liquidity now. Big sweep. So yeah, we just hit the 190s. Scary thing is the way Sol just moved down and took liquidity. BTC still didn't really even drop below 112.3. BTC's got a long way to go if it wants to go and take that same sort of liquidity level as what Sol did. So we do have high time frame support sitting at 190.7, which is just bounced off. So that could kick a move up. So yeah, this time frame is pretty much just stuck under trend. So 14 days to go. Rejecting off the backside of the trend after a deviation. This sort of implies that it's going to come down to whatever that level is there, and if it gets under that, so what do we got? We got 188.786. We'd try to offer support here, and we've got a range trend under here, which is about 180, which could try to offer support. And the target, once again, would be to try and push back up to 204 and above. Unfortunately, it's got all the trends in the way, but that is another time frame that looks like it really has to go down if it wants to go up. Okay. Now this one is another one that could also trigger that 206 move, because we've got a hold level here, untested, 206.2. We're about to hit the trend. Now if we do hit that trend, so it's around, we may have hit it on a lower time frame, just depending on how far, because the wick of a candle doesn't technically move left or right. Sorry, right, I should say. It doesn't move right, you know. Whereas in real life, that would sort of be moving along. So it's we might trigger this to bounce back up to that 206. And if we're really bearish for, you know, the next however many hours we've got left in the day, 2 or 3 hours, if we're really bearish for the next 2 or 3 hours and we hit this trend and then we get this bit of bullish spike or news or tweet or whatever, then all it is it's just this thing hitting a trend and go back to that hold level. So 24 days to go, so we could also just do a big sweep. Doesn't mean much. The whole candle that's up here is going to try to push the price down to 176. So it just comes down to whether the trend loses the battle. There's so much time left to go in the time frame that they could just sweep down to 176 and then come back up to the hold as well. So that's all possible. I think if we went to 176 and they festered there for a while, most people would probably think the bull market's over. And then somewhere before the end of the candle close, it could pull back up and go to the hold. So then everyone would be like, it would be quite funny actually, because it would, you know, everyone would sort of expect November to pump or whatever. If they dumped down here, just stayed down there, got everyone to capitulate, and then late into November, the candle pulls back up to go to the hold, because that's the obligation of the move. Oh yay, November's back, whatever it is, up November. Okay. So this one hasn't. So this candle hasn't actually rejected off the 204 level. It's coming down to test the range trend at about 186. So it could bounce around 186 and go back to 204 or try to push higher. Very high time frame. Okay. This one's got support that we've got back over at that 188.786 area. So if we hit that, we could bounce up and target something in the 200s to probably about 213, or the trend at about 217. So this is getting a little bit more bullish. It's just it's such a big time frame. So if it was to go full on bear, it would be like coming back to this trend that got created yesterday, which is, you know, 150s. So it could come all the way back to 150s before it even bothers to travel up to the top side. So yeah, it's pretty big range. And that one is quite cleanly rejecting, so that's looking like it's coming back to 177 to 173, depending on which trend it goes for, or the lower one even at 162. So it's not, yeah, that's not. So once we get into that 60-day area, we're into timeframes that really do look like they're going to push lower. Same as what Bitcoin was. Okay. So this has to close over 209.988. It's got a long time, but it has to close over 209.988. If it pulls back, support, very first support levels are basically down here at 160s, 150s, and then origin support 120s, and range trend 115. Okay. That's rejecting. So this is a fun one. It can find support at 189,270, technically, but it's got 2 months and 4 days to go for a liquidity hunt. So there is a prior broken trend, which was hard closed by the last candle. That's about 162, so that's one area it could sweep to. And then failing that, it could test the range base because it's bounced off the break level up there, so it could come down to 109, which is getting pretty scary for people. They'd probably expect that to be the end of the market. So yeah, looking at timeframes like this, it's just so hard to actually tell what's going to happen. All we know is that we rejected off a very confluent area, which was that 204, which was, I think there was so many timeframes that had resistance at 204, it was just going to be a problem. That's why we keep saying 204, 204, we're going to close over 204. Where it recovers from, well, 189 would be a very bullish place for that to recover from. This level appears on a lot of charts and a lot of timeframes, but it would also be very bullish if it bounces from there, because there's certainly much lower places it could go. In fact, not that people probably want to hear this, but the first touch retest of the range trend would be 77. So it's pretty low. So double digits. Should we just close that one and forget it exists? Okay. And of course, here is another one which has support at 189. So it's really, really rare, and I probably said this yesterday, it's really rare for a large time frame just to bounce straight off the most lazy entry, because you've got all of those other time frames that want to go lower, and they can all fit in and do their thing within 2 months. So it's not normal for these to bounce straight off the very top, because they might as well go and meet all the obligations of those other ones, accumulate a whole heap, come up, and then go. So one of the people asked me, how do you know which one's in play? Sometimes what you can do is you can just put a level on here and it goes below it, and you just put an alert for when a 15-minute candle closes above, or a 5-minute candle closes back above. So let's say we go down to 170s or 160s. You put an alert that basically says when a 15-minute candle goes above this level, tell me. And the next time it comes back up, what you quite often notice on the lower time frame is just a little perfect tap of, like a quick little tap, and then you'll see on the 15-minute time frame, you'll see a volume spike in the volume, and then the laddering process will begin, and then you'll see it start to go up. And then what ends up happening is the 15-minute, and I'm just using that as an example, but it could start on like a 3-minute or whatever. But the 15-minute will create a hold level, and then there'll be later on, after a bunch of 15-minute candles, there'll be a 1 hour hold level, and then later on, and that's kind of how it evolves. So it's really, really hard to tell which move is actually in play, but sometimes there's little things that you just see over time and you go, oh yeah, we tapped it too perfectly. Like if you tap it to the cent on a low time frame candle, that would be the kind of thing that would make you think it started. So we've got that there. Of course, we also have a completely untested trend down here at 119, so nothing stops it going all the way there first before coming back up. Okay. Is that it? Yep, that was it. That was all the new stuff and all yesterday's stuff revisited. Just a quick look at the monthly thesis. That's our weekly too, by the way. So our weekly is trying to push up, but it's stuck under the prior broken trend. Okay, so monthly thesis. Here we go. If we close below 200.579, we create a hold level to the downside. Based on that, we're probably going to reject back down here and retest the new range trend that we create. And that means we revisit at least the 140s, 140 something. if we close in between 208.597 and 200.579, we don't create the hold level. Now, if we don't create the hold level, we don't have something to reject off. If we don't have something to reject off, we've got a 50-50 chance. So you're talking basically a very high chance of going down if we create a hold level, nearly 100%. Nothing's ever 100%, but close enough. If we close in between these, you got a 50-50 chance of going up. What you don't really want to do is you don't really want to close yellow, because closing yellow would be failed accumulation to trend. And if you did that, the trend rejection off that 241 level would be pretty sizable. The chance of that being really big is huge. So you actually want to close the month down, but in this fine little window. And if you did that, then you've created what could become the base of a new range, as long as the next month can stay up above and create a yellow candle. And then you have a whole candle, and then you have the ability to keep laddering the price up on a monthly scale. So you would look at, there'd be different degrees of bullishness based on this. Like if it actually closed over the 249, then it becomes the base of a range rather than just part of the range. And if that's the case, if the next candle after this one closes blue, if the next candle closes over the 249, then it would probably just bounce off the top side of the oldest range that exists, which is everything. And then you'd be looking at testing these 300s, 380s, or 400s to be basically the top side of your range. Depending on when it does it, there's a prior broken trend running through here, which would likely be the first sort of target, and that's up around the 300s on the monthly. So if this all plays out perfectly in the next few days, it could create the basis for the entire range to expand to the upside. If it doesn't, then it's going to dump back to the trend, and then it really comes down to, does the trend break or does the trend hold? And that's a lot more uncertainty. So we'll see. And let's have a look at, it's a weekday, eh? So let's have a look at Tesla. Okay, so Tesla, we'll just flip between two timeframes here, but so Tesla had a range trend on the weekly, which is running through here, and it opened above that range trend, it's bounced off it, and it's gone up to target this, which is actually a daily origin level. So if we flip back to here, the daily, it's the origin level created from December through to this candle failed accumulation. So this is actually a really good example for an educational perspective of how origin levels are +1 time frame. So we bounced off a weekly range trend to target a daily origin level. And so if you're charting and you're trading these levels, and if you're following along with these videos and you're learning all this stuff, that is why you've got to keep an eye on a time frame below and above, because if there are certain types of polarized structure like origin levels that will be the targets and capable of rejecting weekly moves. So Tesla's basically just doing everything normal like what crypto would do. It's all the same stuff. So pretty much for this to break out and go to some kind of all-time high, it has to close a candle over that 265.33. But what you should be expecting is a rejection off that currently, because you don't typically hit origin levels and not reject. So we should see some kind of downside pullback, maybe to the trend or under the trend. I mean, it could be quite big. It's hard to know. So, but you'd at least expect it to come back to one of these trends as a rejection, just as a pure minimum. Don't know if there's probably some other daily origin level rejections you can see on Tesla somewhere. So hard to chart. The exciting news is, as time goes on and this becomes 24/7, it'll be way easier to actually chart the levels. But Just trying to find, okay, there's one. It's that one. So that, yeah, so that was created here. Had a pretty decent rejection there. So that went from 259 down to 215. It targeted a hold. So daily origin rejection targeted hold. So what have we got up here? Oh, so it's not too bad. You've got a hold in this candle. So the minimum most bullish rejection would probably be back to 251, which was your weekly 1618. So it sounds like it's trying to create an expanded weekly range. So that would be this. Yeah, so because this is the way that in the future we're going to be able to chart these things, and it's going to be so amazingly precise, which is awesome. But I think what it's doing, if you look at the older chart that's got more information, is we'll probably reject that origin level that you can't see on here, and we may, if we can hold the price up, we may close up over the 1618 on the weekly, and then that might allow it to expand the range up to the next weekly break level. So Tesla's looking pretty bullish, which is as it is. The bear case obviously is you got to respect the fact you've just hit a daily origin level. It might take a little bit to trigger, but it could really dump. They are the most polarized moments on the chart, and it's the equivalent of running into weekly resistance. So hence it's always good to take some profits at origin levels or break levels. Okay, I think that's it. So might jump on a live stream after daily close. I don't know if it'll be a 10-hour one like yesterday. I was pretty tired by the end of that. The irony of it is I could have just set those trades in the morning, gone to sleep, and woke up the next day and had the TPs. So didn't have to sit there all day and watch it. But it was fun, and hopefully some people learned some stuff. And yeah, we'll catch you again later.